Regulating Payments Bank latest news. The Reserve Bank of India, RBI, has cancelled the banking license of Paytm Payments Bank Limited, PPBL, with immediate effect, more than 2 years after initially restricting it from accepting new deposits. The RBI will approach the High Court to wind up the bank's operations, ensuring depositor interests are protected through a structured process. This case has become a landmark instance of regulatory enforcement in India's fintech and digital payments sector. What are payments banks? Payments banks are a unique category of banks introduced by the RBI to promote financial inclusion. They operate under tight restrictions, for instance, can accept deposits only up to 2 Indian rupees lakh per customer, cannot offer loans or credit cards, primarily serve as platforms for remittances, utility payments, and digital transactions. PPBL was founded by 197 Communications, 49% stake, and Vijay Shekhar Sharma, 51% stake, operating within the larger Paytm ecosystem. Timeline of regulatory scrutiny. The beginning of oversight, 2018. The RBI conducted an audit of PPBL's customer onboarding processes and found critical gaps in KYC, Know Your Customer, compliance. For example, a single PAN, permanent account number, linked to multiple customer accounts, a red flag for regulatory bypass. Transactions allowed beyond prescribed account limits, raising money laundering concerns. Inconsistent customer identity verification during acquisition. PPBL was directed to halt onboarding of new customers until systems were strengthened. New customer ban, 2022. The bank was formally directed to stop onboarding new customers from March 11, 2022. Financial penalty, 2023. The RBI imposed a monetary penalty of 5.39 Indian rupees crore for non-compliance with regulatory guidelines. Business restrictions, 2024. The RBI barred PPBL from accepting deposits, credits, or top UPS in customer accounts, prepaid instruments and wallets, and FAS tags, and NCMC, National Common Mobility Cards, citing persistent non-compliances and material supervisory concerns. License cancelled, 2025. The RBI cancelled PPBL's banking license, invoking provisions of the Banking Regulation, BR, Act, 1949. Legal basis for cancellation. The RBI cited the following provisions of the Banking Regulation Act, 1949. Section 22, 3. C. Management character must not be prejudicial to depositors or public interest. Section 22, 3. E. No public interest served by allowing the bank to continue. Section 22, 3. G. Failure to comply with conditions of the Payments Bank License. Section 5, B, and Section 6, prohibited from conducting banking business with immediate effect. Key compliance violations: failure to maintain a Chinese wall, operational separation, between PPBL and its group entity, 197 Communications, a critical governance requirement to prevent conflict of interest. Impact on 197 Communications and the Paytm ecosystem. The regulatory crackdown had cascading consequences. Stock fell 40 to 50%, reflecting investor panic. Wallet services, merchant settlements, FAS tag, and auto-pay services were disrupted. Paytm was forced to forge emergency partnerships with Axis Bank and Yes Bank for continuity. User and merchant migration to rivals like Google Pay and PhonePe. Increased compliance costs and operational restructuring. Long-term shift towards a leaner, partner bank-driven business model. Broader significance for India. Consumer protection. RBI action demonstrates zero tolerance toward practices harming depositors. Strengthening digital finance. India's digital payments revolution must rest on strong compliance architecture. Fintech regulation. Innovation cannot bypass prudential norms. Institutional credibility shows RBI's willingness to act against even large, popular market players. Challenges. Regulatory arbitrage risk in the fintech space. where rapid growth often outpaces compliance infrastructure. Difficulty in maintaining KYC standards at scale for digital-first banks. The tension between financial innovation and depositor protection. Risks of group entity entanglement in banking operations, undermining independence. Systemic disruption to millions of users dependent on integrated payment ecosystems. Way forward. This episode reinforces the need for robust compliance frameworks in payments banks before scaling operations. It highlights broad supervisory and enforcement powers of the RBI under the BR Act. Fintech companies must institutionalize independent compliance functions and maintain strict separation from parent entities. Policymakers may re-examine the regulatory framework for payments banks, balancing inclusion goals with governance standards. Conclusion. The cancellation of license underscores that digital innovation cannot substitute regulatory discipline. While fintech firms are central to India's inclusive growth and cashless economy goals, public trust depends on transparency, governance, and depositor protection. The episode reinforces the principle that in banking, compliance is as important as innovation.